Hello, I'm Chloe Rigby, editor of InternetRetailing.net, and I'd like to welcome you to today's webinar, Juggling the Retail Landscape, How to Energize Your Operations for Growth in association with Brightpearl. Over the next 45 minutes or so, we'll be hearing from Anthony Payne, VP Global Marketing at Brightpearl, and Clifton Vaughan, Director and Co-founder of the Natural Baby Shower. Let me tell you about our speakers today. Anthony Payne joined Brightpearl earlier this year to lead the marketing team. He has 15 years of experience in B2B technology marketing, including at General Electric, GXS, and BlackBerry. And over the last 4 years, before joining Brightpearl, has built marketing demand generation and product marketing teams at private equity-backed SaaS startups, NetBiscuits and Social Bakers. Our second speaker is Clifton Vaughan. Clifton founded Natural Baby Shower along with his wife Victoria 10 years ago. Today it's grown from a kitchen table startup to a 25-strong company. Clifton has more than 18 years experience of IT solutions, from website design to designing bespoke business database solutions. Today our speakers will be talking together about how retailers such as Natural Baby Shower best position themselves for growth and how to achieve that while remaining personable. After the presentations, we'll move into a Q&A session. Ahead of that, let me explain how to ask a question. On the control panel on your screen, you'll see a chat box. Write your question in that box and press send, and we'll aim to answer as many questions as we can today. The session is recorded, so I'd remind you that after the webinar finishes, we'll be sending out an email with a link so that you can watch it again whenever is convenient for you. So without any further ado, it's my pleasure to introduce our first speaker today, Anthony Payne, VP Global Marketing at Brightpearl. Anthony, welcome to the webinar.
Thank you very much, Chloe, and thanks everybody for joining us today. As we all know, and we're frequently told at events and webinars such as these, the retail landscape is as competitive, it's as complex, dynamic, and to be perfectly frank, unpredictable as it's ever been. On my way in this morning, I heard on the radio that UK high street and online clothing retailer Next was warning of such extreme volatility in their retail trading environment that they didn't feel able to make any kind of prediction of performance over the holiday season. And so, while understandably a lot of attention is directed towards the front office to growth-related activities like adding new channels, adding new markets, thinking about new product ranges, or improving the customer experience with amazing delivery options to compete with the likes of Amazon Prime, or returns capabilities, or even omnichannel experiences such as click and collect. So while a lot of attention is paid towards these, any decisions that are made without having a solid understanding of core business performances first is highly risky, to say the least. And so with this in mind, we teamed up with Internet Retailing to conduct a survey of over 100 small and high growth businesses in order to understand how they measure business performance to set themselves up in this challenging environment. We focused on 5 KPIs in particular, which we're going to talk about in much more detail with Clifton from Natural Baby Shower in due course. One of the things that came out from that research, and I should say it was both quantitative and also qualitative. So with our partners Internet Retailing, we had a number of in-depth interviews with participants. But what's clear from the research is there's a real mixed bag out there when it comes to measuring business performance. So on the one hand, you get some retailers that are tracking all of these key metrics on a daily basis and using them to make real-time decisions in order to grow as quickly as possible. There are other retailers out there that honestly are struggling with even some of the more basic KPIs, mostly not because of any kind of lack of understanding, but a lack of access to the data. But also, honestly, coming to terms with the potentially huge amount of data that's being spat out of the multiple systems they use. And so in looking at this data, we also compared it to the story kind of in the wider world. And so some of the data you see on the screen right now, for example, PwC quoting that 58% of retailers essentially are struggling to see the wood from the trees when it comes to data. So they have access to all this data, but turning it into useful insights to make decisions is much more difficult. Pressure on margins obviously continue to remain as strong as ever as e-commerce players like Amazon and eBay rack up the pressure on the independent sector. And also importantly, and this also came from the PwC survey, getting any kind of exec or investor buy into those sort of front office initiatives that I flashed up on the previous screen getting any kind of buy-in to that without having some sort of core understanding of how your business is performing is frankly unrealistic. And so it's super important to focus on the business KPIs, which will make up the majority of this presentation. So why do we need KPIs? Well, first off, or on one level, it's really rather obvious and a bit motherhood and apple pie and nothing new here. Basically, having insight into your business performance enables you to make the kind of day-to-day decisions that help your business grow, keep you up to date on profitability and cash, which of course the lifeblood of any business, but in particular in the small and mid-market. But further than that, and I think given the volatility and dynamic nature of the market, being able to respond really quickly to change, being able to be really agile in the face of either negative or potentially positive change in the market environment is essential. You might have to make decisions on ranging, what products do I want to stock this season or during this promotional period or next year, about pricing, about discounting, perhaps in response to a competitive position or high demand or low demand, about promotional activity, about procurement, marketing, etc. Being able to make decisions on all of these things in a really agile way and doing so from a position of intelligence, i.e. accurate insight into how your business is performing, is really, really important. So KPI is essential for that. And then the third area I just want to highlight before we hand over to Clifton is understanding performance KPIs enables you to start improving them. It's kind of obvious, right? Unless you know what's wrong, you can't improve it. And particularly when we're thinking about a lot of back office related KPIs, that understanding can be the start or the kind of the beginning of a journey to actually reducing operating costs, becoming more efficient in the back office, which enables you to free up investment into those growth areas we've talked about, into adding omni-channel processes, into adding new products and new markets, and overall driving growth. So KPIs are super important for businesses, and so this piece of research we think is really valuable. So before we dig into the individual KPIs themselves and have a look at them and what the survey told us and get insight from Clifton, I want to hand over to Clifton so that he can give us a bit of an overview of his company, Natural Baby Shower, and hopefully give us some insights to start off with how he's got to where he is, or how they've got to where they are in building a thriving business. So Clifton.
Thank you, Anthony, and thank you, Internet Retailing, for having us. Yeah, I must start really. It started with Victoria. Victoria started it from the kitchen table with some good product idea. She came back. We came back from New Zealand with an idea for natural and organic products. So there wasn't much of that in the UK market at the time, and we found a niche product. Managed to get it online with a system website, and found that there was a demand for it. And as we started to grow from our kitchen table and running post with the mailing sacks down to the local post office, we started to find that obviously unable to bring in the stock, and as it grew, we moved into a more of an organised business model, I would say. So getting ourselves into a purchasing system, and we ran on our same technology for a few years on the website side of things. But Natural Baby Shower was about providing that product, and product was very much where we were led. We came with an idea for baby shower parties, and we found that the product was really taking over rather than the concept of running parties. So we grew up with good products and good customer service. So really a couple of points that we've probably, or three areas of business that we've looked at in our growth pattern over the last 10 years, but we have grown quite quickly over the last 3, is to provide the right product, obviously, at the right time, so in stock and available to the needs. So lots of research happens on products at our end. We look at the testing of products to make sure it's what we want. We're also looking for the best choice for babies and mums with environmentally aware products or best for baby. We then providing good customer service, so that obviously it's an online experience, different to getting face to face with somebody. So it's quite harder. So your communication has to be a lot tighter, a lot nicer, a lot more friendlier. Maybe not a lot more friendlier, but a friendly service. So we're providing that side, and that's always been a strong point of ours, good customer service. And the third point is to provide ourselves with a good platform for growth. So we've been looking at technology as a way of growth, and really we lay down those foundations since the day we changed to a purchase order system to record that stock coming in, to know. We stumbled across Brightpearl, I think 5-6 years ago now, and in doing so, it gave us the platform to bring in our stock. And one of my favourite points about it was we were transferring lots of data from one system to the next, from spreadsheets to, we were using FileMaker databases in those days, and pulling data from the website into the FileMaker database and then across, and it was great, but it took us a lot of time, and a lot of time-consuming action, and Brightpearl allowed us to bring in that stock and account for the accounting transactions that happen on a daily or almost, well, now every second, every minute of the day when an order's placed and financial transactions are taking place. So all of that was great, and we got that behind the scenes at Natural Baby Shower, and it did allow us to put a foundation down for growth. So one of the things that I tend to tell people or ask people now is that on my experience with another retailer that I was working with during my IT days, was that they had really high growth very quickly, but their system couldn't handle it, and they went out and stopped business for about 3 to 4 months to rebuild their system so that they could work with their customer service, with their CRM, with their internet website. So it was very kind of grained into me at the start to put down a good foundation. So we're really happy at the moment with our technology stack. We're looking at the moment we're always looking for change, and I think something that you mentioned a minute ago, Anthony, was that to be agile and to be changing on as quick as you can, or when markets change. This last 10 years, or especially in the last 3 years, with SaaS software changing and developing, there's been a lot of systems out there that can do stuff or change the way you work and save you time. You just got to, sometimes they don't, you can get the wrong stuff, but if you can build out and see where you can plug these systems in, it does give you a lot of time saving, and it can improve the performance of your business. So we're very active, looking at new technology all the time. I'm not one for hanging around, but as soon as I see something that's new and will save us time, I think it also helps people in their job roles when they've got this technology and information and freedom of information. So we try and do that in Natural Baby Shower and really put down a good technology stack. So as you can see from the slide here, we're using a Shopify Plus program linked into Brightpearl in the middle of our running all of our accountancy, our purchasing, orders and inventory. And then we're plugging into that certain things to help us pack and pick and ship with likes of Ship Theory. We're using marketing techniques with Klaviyo, where we're using it. There is an eBay channel for us, but we tend to not use it too much. It's more of a outlet if we want a final clearance of stock. Shopify POS is for in-store, so we're using in-store POS systems, and we've got our bricks and mortar store. So yeah, we've grown nicely. It's been a great last 3 years have been really exciting, and we've got some new techniques coming in the future. So we're looking for more growth over the next few years. So yeah, really excited.
Fantastic. Thanks ever so much. Cracking growth story. Sorry, was that it? Or?
No, yeah, that's good. Yeah.
Great stuff. Perfect. Thank you. Alrighty. So we're going to hear a lot more from Clifton. So let's get to the details. So as I said at the start, we conducted a survey with internet retailing on of over 100 small and medium-sized businesses, and we really wanted to understand which KPIs they tracked and how closely they were monitoring business performance and why. So the rest of this presentation or this discussion will be centered around 5 KPIs that we felt were the most important, and we'll go from there. So first up, kind of the daddy of KPIs, I would argue, is gross profit margin. So say arguably the most important, really because it determines if you're not making enough money to survive. And as we all know, for small and mid-sized businesses with cash being so desperately important, it's crucial as an indicator of your likely cash position. To calculate gross profit margin, as I'm sure everyone knows, you're taking total sales revenue less the cost of goods sold and dividing that by total sales revenues, typically expressed as a percentage. We also asked as part of the survey what the respondents felt were the biggest drivers of change, or those factors that most impacted gross profit margin. And interestingly, all 3 were what I would argue is essentially kind of external conditions. So market conditions, competitor activity, and currency exchange are the three factors that most impacted gross margin. I think what surprised us most, though, was the fact that of the respondents, only 39% said they tracked gross margin on a daily basis. So with that, I'll ask Clifton. So is gross profit margin something you guys track closely, and any thoughts on that?
Yes, yeah, it is the daddy one for us. If there's not enough money coming through the funnel to pay for all the wages and the buildings and the running, then we can't operate. So yeah, we do look for the products to make sure that the margin's there in the first place. In our industry, the margins do vary quite a lot. They're quite lower than a lot of, I suppose, menswear or other industries. So we start in quite a low area, so we have to be quite tight. So a percentage shifting 1%, 2%, 3% can make a big difference to the way we operate our business. So gross profit margin has been something we've been tracking for a while. Definitely now, not on a daily basis because we don't, but definitely on a monthly, and I do look at it actually probably on a fortnightly. Have a quick look, see if we're running in the same direction. Obviously, certain times of year, like you said, factors important for a change in that. We'll see a change in the next few weeks with Black Friday come in. It's a lot harder to maintain that margin during sale periods. Obviously, we speak to suppliers. We try and get a deal on the table for those periods if we're going to increase sales for both parties. But yeah, it's a period there where you drop, but getting some more volume through, obviously leaves more in the funnel. So it's difficult one. At the end of the day, there's a percentage there, but the lower the percentage, but more volume coming through it leaves more in the bank for cash flow and for operating. So yeah, on a general basis, we look at it very, very carefully. And it's one I would say that everybody's got to get hold of and to understand. And if you don't understand, I would say it's quite a dangerous situation to be running a business.
Yeah, definitely. Actually, you mentioned one thing there, which was or you kind of alluded to the fact that different sectors will have sort of different benchmarks. Do you, and I'm putting you on the spot because we didn't discuss this ahead of time, but do you have an idea within your sector of what good, you don't have to share the numbers, but what good is, and do you benchmark yourself against equivalent businesses by any chance?
Yeah, we do actually use benchmarking. We use a tool actually for that, which is, I don't mind sharing, which is Compass, which is online, and it gives us a benchmark against the industry that we're in. So it kind of gives us an understanding whether we're shooting in the right direction or not. But with our industry, we've got hardware, which they call prams and furniture, and then we've got like the software where they call clothing. And obviously we get more markup on clothing and than we do on a pushchair, but they're higher volume higher price, so our average order value goes up on a pushchair, but the margins are lower. So we have to make, and there's a lot of obviously with the internet, it's a lot of price comparison, and there's a lot of deals that people want because they're spending quite a lot of money at one shot. So it's about, I think we're very careful on price because we want everything. We want to maintain margin in our business. It's very difficult to operate within our sector and cut your price. So you're competing too low because you just haven't got the margin there. So watching RRP, and we're very, very much in the focus of taking on brands that don't cut their RRP and that have a tight control on their RRP so that we're making our margin. I mean, otherwise it's just crazy. You just can't operate. If everybody's fighting, it's very easy to fight on price. You set up a price watcher and the next one's knocked down by 10p or 20p, and Google picks you up, and you're the lowest for a few hours, but we're not interested in that. We're not interested in price matching. We're not interested in that price war. So we try and come away and find the brands that also hold RRP and don't try to be too price cutting and to devalue that product. We want that RRP that's there for a reason. It's for everyone to operate as business and to make a good solid business model. So yeah, that's what we look for. Yeah.
avoiding that race to the bottom, I guess.
Yeah, exactly. Yeah, otherwise it's very hard.
Great stuff. Okay, so next up, second KPI we looked at, or we think is important, is obviously stock turnover rate. Again, I'm sure most people on the call will know how to calculate it, but you're taking net sales and dividing it by average inventory. And really, this is talking about how hard your stock is working for you. Obviously, stock for most businesses is where most of their cash is tied up. And if stock is turning slowly, sitting in the warehouse, you're at risk of shrinkage, or wastage, or of obsolescence, depending on the product. Now, as with any of these measures, it's going to vary tremendously by sector. Fresh produce is going to have a way higher stock turnover rate, obviously, than luxury furniture, for example. But knowing what your stock turnover rate is, knowing what you should be shooting for, we think is super important, which again was why it's surprising that an even higher proportion just didn't know what their stock turnover rate is. So again, over to Clifton, is this something you guys track? And if so, how closely? And what does it tell you?
Yes, thanks. Yeah, we do definitely look at stock turnover rates. I do it by looking at obviously the calculation that's there, and usually we're quite fast on this. So it's not a great worry, but our stock turnover is always, our stock holding is always increasing, but that's because our sales are increasing, so that's naturally going to happen. But what I tend to do is I walk around the factory a few times a month and say, look, is anything not moving here? I mean, we look at reports, but there's nothing like a physical walk around and look around, see that stock, is that moving? No, that's not moving that month. And it opens up those questions, sometimes that you don't get from reports, or you're not looking for, you can't see straight away jumping out at you. So a good walk around the factory on the stock turnover to ask the guys there what's happening opens up the likes of some of the brands that maybe we've just dropped out on that price, or someone has cut the price of it, or there's new models around the season, and we haven't got that on our site yet, and the other one's been discontinued. Or so looking at those kind of measures, we do look at making sure that stock's moving. Obviously, yeah, it's tied up in money, it's cash flow, it's money sitting there. You've got to keep it moving. That's one.
You're paying for the space that it's sitting in as well.
Yeah,
aren't you? So,
exactly. Yeah.
Great stuff. Okay, I think the next one's certainly related, and that's sell-through rate. So again, everyone can read the slide, but it's calculated by taking sales dividing by the stock on hand at the beginning of the month, and then again as expressed as a percentage. And similar to turnover rate, it's looking at your best performers. So this, I guess, is more about looking at the individual products and understanding which of your products are moving through quickly. What percentage are you actually selling to customers? It's going to vary by time and location. When I was doing kind of the research to this, it struck me, Clifton, that is this particularly, and tell me if I'm right of the mark, but do you feel more important for sort of seasonal products, where it's really important that if you've got a short window of sales, maybe it's Christmas or Halloween related or whatever, the sell-through rate for particular products, so that as best as possible how many to order, so that you end that season with the very last item going out at full price. It's kind of nirvana before you restock for the next cycle. Is that how you use sell-through rate, or is there a completely different approach? And do you look at sell-through rate?
Yeah, we look at it, and yes, very much in the way you say. There are seasonal products on our site. There's ranges of clothing that come in for spring, summer, and autumn, winter. The jackets or the t-shirts in the summer. So you're looking at them. You have got a short window before you start to think about, that's sold at full margin. Now we need to drop that. Let's get them out before we lose our margin on that and have to sell it off at 20% less, or however it works. But yeah, we look at those, and when we're forecasting for something like Black Friday, we look through at those sell-throughs through that period. What happened last year? I mean, it does change. It's difficult to forecast, but trends and everyone. I'm not experienced too much in trends of industry, but it is very difficult to monitor that. Last year we had a big sale of high back boosters, and whether this Black Friday that will still continue. It's a period where we or it's a measure that we use a lot to use on our forecasting and for our prediction of stock into the warehouse. So we use it for seasonal stock and for generally our everyday holding stock.
Perfect. Thanks very much. Okie doke. So one of the interviews we did, or Internet Retailing did as part of this survey, one of the responses back was that the stock turnover and sell-through rate measures they use were sort of about range and newness of the product offer. The next two we're going to talk about, they felt were more about sort of customer experience and how they're delivering against customer expectations, which I think is a really interesting way of putting it. So stock turnover and sell-through more about range and product, and the next two, which are average order value and units per transaction, more about delivering against customer experience. So let's have a look at average order value. So I think, as everyone knows, simple way to calculate total sales divided by total transactions. How big is the order? It's one of the key measures of understanding how much your average customer is spending. Importantly, it reflects on the impact of the sort of campaigns you're doing, who you're driving to the site, through what calls to action or what promotions you're using to get people onto the site. And it's also really important when you're thinking about optimizing pricing and sales strategy. Of course, you're trying to drive up that average order value. And I have to say, it wasn't really a surprise when we got these survey results back to see that a very large percentage, or a proportion, 87%, know their average order value. So I'd be amazed, Clifton, if you told me this wasn't something you track. Maybe prove me wrong, but presumably it is, and maybe you can give some insight into kind of the levers you might pull to improve this, both in store and online.
I think this is the KPI that I see the most in all the systems that I turn on. If we're looking in Google Analytics, or in Compass, or in wherever we're tracking in the back of our website software, average order value comes up. It does differ a little bit, I have to say, between each system. So the measurements are always different. So I think one point might be say is, when you're taking any of these KPIs, is to take a moment in time at what system you're looking at, and then benchmark it on that. So it's not always like the figure that you think is 100% accurate, but to take a benchmark from that system and say, right, from that system I'm at there, and then you see you're benchmarking it against going up or down. But average order value is something that, we look at, and it's something we're always trying to obviously increase. You're paying for that customer to come onto your site or into your store. So by getting them the average order up by either increasing the value of the items that they're buying with respect to the margin they're buying. I think one area of looking at this is you can run away with an average order value, but you might be losing margin or less margin in that average order. But to grow that average order value is a key moment. So if you're looking for an area for growth, obviously gross profit margins are great. You want to grow those, and average order value is a key one to grow and to see. And if you're seeing that grow, that's great. Then we use a different technology to help grow that. That might be keeping someone on the site longer. That might be introducing them into more items at certain times. So looking at that customer journey and looking at that moment to increase the basket size, and it doesn't always happen that's going to go down when you do a promotion, because a promotion can increase that average order value. So at times when Black Friday comes along, obviously people put a lot more in their basket at that point, so the average order value goes up. But yeah, we track this regularly, and yeah, I like this one. It's clean, it's easy to look at, and we compare it against what people's actions they do on the site. So whether they're what they're doing around the site at the time, what affects their average order value, what did they use? Did they get involved with chat, say? A lot of people are using chat now. Did they use chat, and what was the average order value if they got involved with chat, or if they didn't get involved with that chat? So yeah, we're looking at key drivers like that to increase the average order value, and pleased to say it's been going up.
Fantastic. I think the point you make about, I always think it's funny with this one is like it's probably from a systems perspective about the easiest thing to calculate. So any software that's involved in the transaction, whether it's the back office or front office, is going to have this, and they're going to show it to you. So it's interesting you say, I almost don't care what the number is. I just pick one and then look for the variation. That's the key. It's not the absolute. It's the change over time, which obviously is essential.
Yeah.
But yeah, good stuff. Okay, all right. Well, that last KPI before we open it up to questions to the floor is a similar one again, and it relates to, I think, to the sort of customer experience, and that's units per transaction. So again, dead simple on the maths side, which is good for me, which is the total number of units sold divided by the total number of transactions. So really, it's about how many items are in your basket. It's, we think, crucial to track by sales channel. So obviously we've talked a lot about online, but if you are selling across multiple online channels like the marketplaces or your own web store, but also offline, then understanding how this varies by channel is important. In contrast to the previous one, to average order value, where almost everybody was tracking it, it did strike me as interesting that actually a relatively small proportion, so under 40%, don't track and don't know their units per transaction. So I'm interested to know from you, Clifton, is like, do you care? Are you more interested in that basket value, or does the number of products in the basket actually matter to you as well? And that's kind of both online and offline.
I think, yes, it does. We want to see the units per transaction go up. It shows that we're engaging with the customer on the products. So the more products that people are buying from Natural Baby Shower, the more happier they are with our product range. If they're dipping in for one part of our range but can't be enticed into something else, you know, we're not hitting that customer with what they may require. Or they might have just come in for one car seat, but you know, there might be other areas of their journey that they're in right now that we could be providing them with. So looking at the units per transaction is a good way of measuring and looking at whether you're getting that right basket size, or getting that person interested in your site. So we use it again a lot. We look at it through our Google Analytics really, and we use it through Shopify to look at the units per transaction, and it gives us that idea. I think what you said about understanding the customers, and you know what you're looking at, and they're interested, and you're throwing them around that site to look at other products to increase that, and then we'll find at sales times like Black Friday there'll be more units in that transaction, so that will increase. So periods of sales does tend to increase that. But I think one of the things just to note here is we talked about these figures, average order value, units per transaction. They are key. We've got to be careful that that's not at the detriment of a gross profit margin. So it's chasing these two to increase, but making sure you're keeping an eye on the gross profit margin. Otherwise, your business is running away.
Yeah, it all comes back to that daily KPI we started with, doesn't it? Actually, on that units per transaction one, just as a matter of interest, I know you guys have got a physical store as well, and I know you use a POS system there. Do you look at units per transaction through the POS system as well, or through Brightpearl linked to POS in store, or is it something you're kind of not so aware of in store? It's a bit more anecdotal.
No, yeah, both in store. So because the data is broken down, we can see POS in store and online, but also we look at online on device. So we look across it in a mobile technology or desktop technology. What's happening there? People are on the go. They might not put so much in their basket in a mobile, but when on a desktop. So how can we increase that on a mobile, or how can we increase it in store? And we're looking at some new ideas for our business that may increase, should increase the units bought in store. So to drive traffic into store, we like that experience. We like parents and mums and new mums to come and see the store and to walk in and experience Natural Baby Shower. So we want to drive them in. So giving them maybe a better offers in store is something we'll look to, and hopefully that will increase that unit per transaction and average order value.
Fantastic, great stuff. That's super. Well, thanks for that, Clifton. So that's it essentially for the formal part of it, or semi-formal part. 5 KPIs that we think every retailer should be tracking on a regular basis in order to make those agile decisions and compete. So thanks, Clifton. So at that stage, what I'll do is I'll hand back to Chloe. He's kindly going to moderate any questions we might have received from the floor. So do fire your questions to either Clifton or myself.
That's right. Thank you both for, I thought, was a really interesting and insightful presentation from which I probably learned quite a lot. We do have a few questions that have come in already, but just before we start in on the session, a quick reminder to anyone else who has a question on how to ask it. On the control panel on your screen, you'll see a chat box. Write your question there and press send. And if your question is directed to one person in particular, please do mark that. We'll aim to answer as many questions as we can today, but if we don't get to yours, we'll follow up offline later on. So, first question, and I think this is probably a question that both of you could tackle. the question is, what specific advice or workflows would you give to a retailer who is hoping to improve their average order value? Clifton, is that one that you could tackle?
Okay, yeah. Increasing average, what workflows to increase average order value? Okay, so we're looking, as I said earlier, you may be looking for more expensive items to buy. That's obviously going to increase the average order value. If that's not possible in your market, then you are looking for the number of times that item is entered or to support it. So I would have thought similar products, or knowing your customer, getting behind your customer's journey to understand them. So putting in flow some techniques. There's cross-sell and upsell, which will increase the units per basket and increase the average order value that way. You want to get them around the site. So I think workflow-wise, I'd look at those two areas first: cross-sell and upsell. If you're not placing them at key moments, and key moments is when they've committed to buy, or when they've going to purchase and finish the purchase. At that point, their trust is with you on the site, and they've got that understanding. They want to buy something from you, and then you've got to show them relevant product to increase that order value.
That's great. Anthony, is there anything you'd like to add to that?
Well, Clifton's the retailer, so I'm sure he's covered the main ones. The kind of angle I would take on that is, as a marketer myself, although in the B2B space, but is kind of taking advantage of whatever CRM information you've got, customer, data about your customers, your previous customers, and looking at whether there's marketing opportunities to previously high value customers, or conversely those that have bought a product that often leads to more purchase, and doing some sort of targeted marketing to those guys. You previously bought this product, or we know you've previously bought this product, and the others that have bought this product have also bought higher value goods. So I'm as a B2B marketer, really interested in segmentation and targeting, and I know for that CRM and understanding past consumer buying history is just as important in the B2C space, and targeting those potentially high spending customers could be a way of increasing AOV. But so yeah.
That's great. And also for you both, any particular advice if you want to boost your gross profit margin? And would that differ?
A simple one for me would take your suppliers out for lunch. But it's difficult to get that gross profit margin up, isn't it? It's about your selling price against your purchase price. So you have to be good with your buying, and you have to make sure you're maintaining your RRP and you're not slashing product. I think those two techniques lead to a higher gross profit margin. I mean, you could bring in there's other ways of measuring that gross profit margin. If you're bringing in some of the ways to sell it, you've got to then look at the technology that you're using to sell it in that way, or however you measure that final gross profit margin. You could tweak it other ways, but really it's to do with the buying price and the selling price. What do you think, Anthony?
Yeah, no, I agree totally. It's that simple measure, isn't it? Yeah, if you're paying less for it and selling it for more, then you're in good shape. I'll always come back to data again. And I suppose the other area is this will seem a little bit sort of disconnected, I think, at first, but having control over those back office processes, the repeat processes that you run in your back office in terms of processing orders and reordering stuff. So making sure your back office is as tight and as effective as possible means you, as kind of in charge of trading, gets to spend more time on those kind of key decisions on ranging and pricing from your suppliers, and then maximizing sale price. So it's a slightly, as I say, oblique answer, but if you're able to focus on those decisions day to day and not have to worry about kind of the manual repeat stuff, then you're in a better position to get the best possible gross profit margin you can by focusing on it and continually adjusting things.
I think that's the key point, isn't it? With a lot of today's technology, we're going towards more automation, and so by automating things, we're giving ourselves more time to look at things like this. I mean, the rest of the time, for the last 3 or 4 years, we've been doing a lot of sales invoicing, and the time spent on that can now be applied into the accountants looking at monitoring figures more. So some key areas there to improve the business is to bring in some more automation, so you can look at these energize on a more daily or weekly basis.
That's great. And my own follow-up question on that is there one of these KPIs that's a quick fix that you can maybe do something really straightforward to make a real difference? Clifton?
Yeah, I was just looking. I think quick fixing is quite hard with these stock turnover rates, sell-through rates. It's all about getting gross profit margins. Obviously, we just talked about average order value may be a quicker fix to try or the units in the basket, because you could apply some technology to your online store that would maybe give an uplift quite quickly to average order value or units per transaction. So I think those two may be ones that you could fix quite quickly.
Yeah, I if I had a quick fix, I'd be selling it to the people on the call. I think our focus would always be on, like, given the results of this survey, would be make sure you're tracking these numbers in the first place, because too many, as the survey showed, too many people are in the dark on some key measures, and it's not possible to fix what we don't know about. So that's where I'd be focusing, certainly.
Indeed, absolutely. Another question coming in says, what metrics help you compete with Amazon? I don't know if
Definitely want to Clifton that.
We try and stay away from Amazon. Some of our products are in there. We try and find products that aren't sold through Amazon as much as because Amazon is amazing, isn't it? It really is. It's quick, it's fast, it's delivered so quickly, and it's price competitive. So it's a very hard one to come up against.
So you're going for the weakness metric.
Well, yeah, and I think certain products sell well in Amazon. You know, that screen protector you want tomorrow, or I don't know, something for the garden tools, or something that you want quite quickly. But buying a buggy or an informed choice, it's more about, I think, getting a feel and a test and an understanding, and you want someone more with product knowledge. And I think that's where we come into ourselves a bit in the marketplaces. We can give that advice, and we can let people know about that product and the ins and outs and all of that. Whereas I think Amazon, being such a big fish, it's difficult to come across with all that product information and testing.
I would. I mean, my own observation would be that competing with Amazon on their terms is suicidal. So it's figuring out, as Clifton says, whether or not you play with Amazon and you view them as a channel. And the statistics suggest that for a lot of products, and as Clifton said, it's going to vary tremendously by product, but for a lot of products, if you're not selling on Amazon, you are missing out on a significant market. So it's either deciding that Amazon is a channel and just making sure you're operating the best you can, winning the buy box, making sure your fulfillment rates and your performance against Amazon's metrics are important, or choosing a different battleground to compete on. And as Clifton says, service and the personal touch and the product knowledge is key, but competing with them on their terms is a hiding to nothing. But ignoring them is just as dangerous. Figure out whether it's a channel you're going to make the most of, or you're going to take a different approach, but don't ignore it, because they will win.
That's great. Well, thanks very much to you both for that. Next question, back to the questions. What other systems or tools should retailers use to improve the KPIs that you mentioned today? Maybe that's one for you, Anthony, first.
Yeah, I mean, I can certainly start it. Obviously we're a vendor, so we'd be delighted if the answer was Brightpearl to anyone not using it. But there's an ecosystem of technology out there for retailers, and I think what's key is understanding what each product is supposed to do for you, and particularly how they integrate with one another. So it's all very well having the very best sort of front office e-commerce store, but if it's not integrated tightly into your order management, your inventory levels, so you're having to manually update stock levels or what have you, and into your accounting system, so you're having to manually end of month update sales figures and pricing, then it doesn't matter how good the individual piece of technology is, that lack of integration is a problem. So we're really strong on the point of having all of your data, all of your product data, stock levels, your customer data, sales history, all in one place, so that you're able to actually take a look at these KPIs and make sensible decisions and not have conflicting data or bits missing. So to me, it's about understand that broad technology stack, but really make sure that you've got all of your data centralized in one place to help you make better decisions.
Yeah, I totally agree with that, Anthony. I mean, it can be a minefield across multiple software and multiple systems, seeing the analytics and tracking them. I think get your own house in order, get a solid base of what you're producing, what your data's doing. And Brightpearl did that for us. It gave us that connection to our store that brought down the orders and brought in the financial and accounting. So we didn't have to do a lot more processing from there. We could find let's get to it, the profit at the end of it all. So we're running and running our accounts and our financials through that. And then we go outside to benchmark it, to have a look. So two things I've mentioned today is obviously Google Analytics, which everybody tends to plug into and gets their data through. If you know what you're doing in there, I'm quite good, but there's a lot more that I could know. There's a lot you can do within Google Analytics. But outside of that, one might be to use. It's quite expensive, but it's good. It benchmarks is Compass. If you can get that going, that will benchmark you against other industries, and that will just be an area to look at each week or each month to give you some idea of where your KPIs are heading compared to competitors or other people in your industry sector.
That's great. And then another question for you, Clifton. What's the single most important KPI for natural baby shower when you're making business decisions?
It's that it's margin. It's where we can maintain that margin. So we take straight away from the bottom. That's when we're speaking to suppliers. What is this? And if they give us a margin that we feel, and if this product is being discounted around the internet, then and it's a low margin, there's nothing to move on. So we very much like to we set a benchmark margin that we like to work with certain product types, because we know that they differ between the product types that we sell. So we tend to set those margins ourselves, and then if a new supplier comes to us and looks at that, we look at our base margin for that. So I suppose that's really looking at our gross profit margin in true terms. We're looking at that gross profit margin before we take on a supplier. I think that's a single first, but otherwise we've got no movement on what we can advertise with it, how much we're going to spend on it. Natural Baby Shower is very keen on getting behind the brand that we sell. We don't just pick up product and don't know about that product. We want to get and understand why that product's there, what that brand's doing. So we're looking for brands that have a story, that have a lifestyle that people enjoy and get pleasure out of. So we look to promote that brand within our own brand. So we spend money on advertising that brand and using it across social channels, with inside Google advertising, and spending money on that brand. So there has to be the right margin in that. Haven't got big enough yet to set the retail rules that a lot of the big nationals do to get a budget back on that, or set up a contract like that. We haven't gone into that at this stage. I'm sure that's coming. I'm sure with growth that we'll need to look at that, because as we spend, we've got to maintain that margin. So to get the sales as we spend more, we've got to either get more margin back from them, or get them to sponsor some of that in another cost. But yeah, gross profit margin, I would say, is most important.
That's great. Thank you very much, Clifton. And on that, I'm afraid we've come to the end of the time that we have for today's webinar. If we have got any other questions, then we will follow up online with those questions. So I'd like to end the webinar by thanking you all for listening and for taking part with your questions. I'd like to thank our speakers today, who were Anthony Payne, VP of Global Marketing at Brightpearl, and Clifton Vaughan, Director and Co-founder of the Natural Baby Shower. Thank you very much, guys, for being with us today.
Thank you.
Thank you very much.
As always, we'll be following up by email with a link to the on-demand webinar, which you can listen to at your convenience. So thank you once again for taking part in this webinar. Thank you and goodbye.